Hello everyone, in this video I want to quickly give you another view, because if you just open any media website today, it will be likely about some negatives in China, for example the property market, the youth unemployment. Some of it I have covered on the channel before, and this has consequences. In fact, the Hong Kong Stock Exchange has entered a bear market right now, so this is quite serious, of course. And so I want to share maybe also a different viewpoint. That doesn't mean I'm agreeing with everything that is being said in there. However, we only get just one side, which is usually the US media. And so I want to also show the other side from a more Chinese perspective. So I'm sharing this Twitter thread here, which I've also shared in my Patreon community this morning and on Twitter itself. And this account is very pro-Beijing, so keep that in mind. My idea here is that you can see both sides, the negatives in the media, and here a more optimistic take on the whole situation as well. And then you come up with your own views on that, and based on that you can hopefully make some decisions in the stock market, right? So let's dive in there. The Twitter thread starts like this. Nowadays everyone is saying that China's economy is not good, but if we carefully study the evidence they list about that a bad economy, we will find that they are largely lacking factual support, or at least controversial. And you can see from the language there, it's possibly a native Chinese speaker writing here. So this is a Chinese perspective of things. I will analyze them one by one here. First, unemployment rate. So I talked with this in my video with Tom Hayes the other day. The unemployment rate is 20% plus among young people aged 16 to 24. This number is quite misleading. Maybe also the perspective of the Chinese, why they ruled to leave it out of the reporting, which I think is not a good sign. I think it's bad in the way they've done it, stopping the reporting like this. But anyways, he's saying a 18-year-old preparing for the second college entrance exam, or a 22-year-old a college graduate preparing for graduate entrance exam like TOEFL, IELTS and so on, will be classified as unemployed. Obviously a more reasonable indicator is the overall unemployment rate, which is 5.3%. So I would say yes, the 5.3% isn't as bad, and one could say that this is the real indicator to watch here. However, we also of course have to see specifically what's going on with the youth. I agree with this point. There might be many people in this statistics that are not actually seeking jobs, and in effect I think that the Chinese young population is actually quite similar to the West, that some of them are rather, let's say, truth-seeking, freedom-seeking. They want to travel, they want to make their own business. They don't necessarily fit into this pattern anymore that everyone is going to graduate and then straight go into a corporate system and work for them as a corporate slave, if you will, right? The next one is second, China's exports have declined. This is true, just a second, this is true in recent months, but not because of China, but because of the world. Many countries in Europe, such as Germany or the Netherlands, have already fallen into recession. That's a fact. And imports from the United States are also declining, leading to a decrease in demand and inevitably leading to a decline in exports from industrialized countries, China, South Korea, Japan, and so on. No one is good on this. In fact, among the general decline in exports, China remains the relatively best performing country. That's interesting, something which I didn't know or take as a fact before. From January to July, China's export continued to rise 1.5%. Exports from industries such as NEV, batteries and PV surged. China will be the largest car exporter in 2023, so highlighting a couple of achievements there. After a decouple with the West, the Russian market flooded with Chinese goods now. So yeah, highlighting some supportive elements here. I would also say careful what you wish for. Many people out there and commentators really want that the Chinese are not doing well and doing bad. However, this will hurt back the whole global economy. So I agree here with the author that the fact that Chinese exports are not doing that well is also a sign of the foreign countries not doing well in this regard. And that might be because of, for example, they have done lots of orders during the pandemic, and now they are using up the supply and inventory and therefore don't need as many new orders. So the truth will come out soon, like whether or not the whole world is in a recession or not. And actually, of course, we don't want the whole world to be in a recession. But I agree, countries like Germany or Netherlands have shown quite negative territory in such statistics recently. Then, very important point, China's real estate industry is declining. This is true, but it isn't just now. It has been several years. China's urbanization has entered the second half with an aging and decreasing population. Chinese people no longer need so many houses, which means the decline in real estate is inevitable. I think Xi has been implementing measures to curb excessive speculation in real estate since 2016 with the aim of preventing a real estate collapse like Japan in the 1990s. Many people are currently comparing Japan with China and saying China is becoming the second Japan with deflation and no growth at all, and due to the real estate market. At present, although the real estate industry is in trouble, the problem is not big. So this is also a very Chinese perspective. I'm also always saying, like, don't expect too much stimulus. They will bail out companies that are in huge trouble if it's systemic risk. But I think also the Chinese most generally are thinking that the situation is largely under control, despite what we're reading in the media. First, housing prices in large cities have not fallen, and the price decline in small and medium-sized cities is also limited. Real estate companies such as Evergrande or Country Garden have defaulted, but their ordinary customers won't get hurt. By the way, today we have bankruptcy news around Evergrande, but that is just a normal procedure to go into this bankruptcy proceeds in New York. This is more of a legal matter, so this is nothing new at all, actually, but of course it makes for nice headlines. Third, real estate beneficial policies are gradually being introduced and real estate stocks have risen significantly. Overall, I believe that China has avoided a real estate crash like Japan in the 1990s. So it's interesting. My personal view is that I always thought like the real estate prices are quite elevated in China. That's just coming from a German perspective where we have much lower house prices. And so I do think there is a merit to it to bring real estate prices down a little bit. I would actually love to see this over allocation shifting away from real estate more into the stock market. I think that would be the smart thing to do for the Chinese government and the leaders. Next point, the United States and China have decoupled, and Mexico and Canada have now surpassed China as the largest exporter to the United States. This is also true, but the United States still imports a lot of things from China, and the trade volume in 2023 is similar to that in 2018. China's exports to Mexico have experienced explosive growth in the past 2 years, and China's exports to ASEAN have increased significantly since 2019. Obviously, many Chinese products have been labeled as Make in Mexico or Make in Vietnam and exported to the United States. That's so true. The United States isn't the only one. While ASEAN and European Union are Chinese main exporting countries, as well as the global south, including Russia. Next one. China's stock market falls. If you know the Chinese stock market, you will find out that the Chinese stock market has never reflected Chinese economic growth. The textbook is wrong. The reason is that the fundamental purpose of the Chinese stock market is to help enterprises raise funds to develop the economy. From this perspective, the Chinese stock market is very successful, and its goal is not to allow ordinary people to make money easily through speculation or investment in the stock market. I think the Chinese government should learn from the United States on this. No matter how bad the economy was, its stock market has always risen. And that's exactly my point as well. I also think that it is indeed, or should indeed be, a tool for the ordinary person to get more wealth, build more wealth over time by being able to dedicate funds to the stock market. And that should be institutionalized with something like a 401k. And I think that should be the response by Chinese leaders, actually, to embrace the stock market and to make it as a tool. Similarly, what the United States have done, learn from the United States here and do build a resilient stock market. That would be great for China. It would be a gigantic program for them. 6th point, Chinese consumer confidence has not recovered. This is true only in the real estate and related fields. such as furniture and home appliances, but not in other fields such as car consumption, and totally opposite to the fact in personal consumption fields such as tourism, catering, movies, fitness, etc. I'll do another video on my personal take here, my experience in China, but yes, I could also see that the Chinese consumer is back in full force, outgoing, eating, drinking, enjoying themselves, consuming, but of course we have seen some data where the Chinese consumer is not fully back yet. So it will be seen like how this also shows up in the real data. First, tourist sites and restaurants in China are now crowded with people. People mountain and people sea, so that's referring to Chinese idiom. Renshan Renhai. Chinese film box office has just had its best summer. Between it has nothing to do with Hollywood. Chinese service industry CPI has been above 54 in every month of 2023, so that means expansion. It's still in a period of rapid expansion, which is the main driving force for China's GDP growth, which might still reach 5% this year. So yeah, 5%, that's still 12 trillion of the entire world growth, and 30% of more than 30% of the world growth that will come from China. So he says, overall, I believe that the Chinese economy is not good. It's carefully planned propaganda war by the United States government, which is why Biden and Yellen commented on the Chinese economy recently, obviously not a coincidence. This propaganda war is successful and overwhelming that it has indeed led to a decrease in foreign investment and decrease in investment confidence among many Chinese. However, the propaganda war is never decisive. In 2022, the West also won the propaganda war against Russia. How about now? The Chinese economy has enormous advantages. NEV, PV, batteries and so on, driving the force of the Chinese economy. The service industry also has a huge growth potential. And the progress of Chinese technology is also evident, naming here the chips industry. For China, the time of rapid growth has passed, but it is expected that the economy can maintain medium growth in the next 10 to 20 years. So I agree here a little bit with the take around that this is largely also a communication issue. China is not very well at communicating, for example, striking off the youth employment out of the list, but also communicating what they're doing well and that they're good at. Of course, we have to see that the US media is, of course, a little bit biased here, and negative news also sells very well. And we cannot deny that Biden and the Biden administration have had a very tough stance on China and negative comments. And that, in fact, I believe really can lead to a shift in sentiment and therefore also a shift in the actuals. To be fair, like even a recession can happen in the mind simply because people are expecting it. So it's a psychological thing, an emotional thing, and we cannot rule out that this is some sort of a agenda on the agenda here somewhere on the United States side. Don't want to be like this tinfoil hat here, but I think there is some truth to it. So I hope you enjoyed that. This was a little bit of a contrary view to what you usually see out there. So now you can seek the truth and maybe decide for yourself, is it in the middle? Is it more here on this Chinese take, or is the US media the right one here with all of the doomsday articles? I hope you enjoyed that video. Thanks for watching, and let's see what's happening in the stock markets today.